This is Danny Gould with the Gould team, selling Silicon Valley. Welcome to another Silicon Valley market snapshot for the last week here and the first week of October, but the last week of September, technically, of 2019. Q4 is now here. We're in full swing. And what I wanted to do today is just go over all the basics, right? Before we jump into any theory or how's the market going to do in 2020 and beyond, let's just kind of sit back and analyze the market, where it's at today, and how that could impact you if you're a buyer or a seller making a decision in the next 15 to 30 to 45 days, shall we? So first things first, let's look at the Santa Clara County statistics for this week. Now, if you notice, the year-over-year change for single-family residences is decreasing even further. Last 2 weeks, it's been -1. This year, right now, it's -3. This is trending, if you will, in a seller's favor because there's less and less and less inventory when compared to last year. However, the condo and townhome sector is 14% increase year over year. Now, this is much better. This is way better if you're a home seller in the condo townhome sector than even say 2-3 months ago. And I expect that at some point that number will come down. And what's going to happen is that eventually we will be lower overall in terms of active inventory year over year. Right now, we're looking at about a 1% increase. There's 2,064 units on the market at this point in time right now. And last year there were 2,030. So only 34 more houses right now at this point in time than there were at this time last year, which, if you're a home seller, should be good news for you. We've reached stasis, we've reached equilibrium. And of course, if you've been watching my videos for any point of time, you'll know that this is not new, right? I've been talking about stabilization, stasis, neutralization for the last, I don't know, like 6 months or so. But now the numbers are finally truly reflecting it in the capacity that, in the capacity that it can. Now, when you look at the pending numbers, however, there's a bit more good news if you're a home seller, and that is year over year, we're 4% in the positive and 20% positive for condos and townhomes, which means that this additional inventory is being absorbed in the condo townhome sector, and despite lower year over year numbers in the active sector, pendings are still trending upwards. This is good because if you haven't studied basic economic theory, supply and demand, there is less supply and more demand right now in the single family sector, and definitely more supply, but also more demand in the condo and townhome sector. So for home sellers here in Santa Clara County, this is very, very good news. And when we look at 2016, right, because 2016, if you've been watching these videos, is a very good benchmark, you'll see that we're definitely above in the single family sector, but not that much further, you know, only about 100 units. And as the season progresses and as we get closer and closer to the winter, I would be very interested to see how the single family sector behaves in comparison to 2016. I believe we might even see that number, that difference diminish as we head into the winter months. And definitely condos and townhomes, there's way more than there was in that benchmark year, 2016. So I don't expect that number I don't expect us to approach 2016 numbers in the condo townhome sector. However, remember, for a very, very long time now here in Santa Clara County and in Silicon Valley in general, we've had lower than average inventory here in the valley. And so over these next 6, 12, 18, 24 months, as we begin to normalize and as inventory begins to stabilize, what you'll see is that the market will behave more and more like a normal market, which means homes will take a little bit longer to sell. That being said, because we're in Silicon Valley and because things are so different here, I know without a shadow of a doubt, and we see it even right now in this market, where homes in that $800 to $1.5 million price range in good neighborhoods with the shiny white fence and the beautiful new kitchen and the beautiful hardwood floors. I mean, those homes are still going to get 2, 3, 4, 5, even maybe creeping into that upper echelon, like of double-digit offers on the property. Like, the multiple offer market for the most part is gone. But with these kinds of numbers, there's not such a surge of inventory where it's going to completely eliminate that from the ecosystem. And so there's definitely still the possibility for records to be set. And so if you're a buyer in today's market and you're thinking that you're going to get a deal, I mean, you could, but it's not going to be on that home that everyone else wants. And so there's that distinction, right? It's if you go and you offer less than market value on a home that everyone in their mom wants, like that's not going to help you get to where you want to be. And so keep that in mind going into the later part of this year and into 2020. If you're a buyer, yeah, there are certainly opportunities out there. More so than there has been in a very, very long time. Couple that with the fact that your interest rates are phenomenally low, lower than they've been in a long time. It's a very good time to be a buyer. But you're not going to get that beautiful white picket fence home in the $1.4 million range in the 9 and 10 school district for a discount. Not going to happen, And so just be cognizant of that when going in and making offers. Let's look at the heat map, shall we? The active listings here, very telling. So remember, guys, what happens in the Mid-Peninsula trickles down to the rest of South County, into central Santa Clara County, and then down into South County. And right now what we're seeing in the Mid-Peninsula is an increase in active inventory year over year. Now, what you have to understand is that these things vary week by week. I mean, a few weeks ago we were looking at this map and almost everything was in the red, right? So these numbers tend to fluctuate, number one, because inventory levels in the Mid-Peninsula are lower when it comes to just like pure raw numbers than they are in the central part of the county, and definitely definitely when it comes to the central part of the county and especially San Jose. And so these numbers in the Mid-Peninsula can fluctuate from month to month, from week to week rather, just because of the smaller numbers that we're dealing with can sometimes lead to more volatility when it comes to percentages. And so definitely more active listings this week. But what I want to point out one situation in which you maybe should think twice if you're a home seller, and definitely a situation where if you're a home seller right now in the next 15 to 30 days, things are looking good for you. So if you're a home seller now and you are in Los Altos, things may not be so hot for you right now because there's less demand year over year when measured, and a lot more supply. So your competition is far greater and there's less demand in the area. So if you're in Los Altos, things may not be looking good for you in the next 15 to 30 days. Something to keep in mind. Now, on the flip side, if you are in Palo Alto, say, right? Like of the 4 major cities here in the Mid-Peninsula for Santa Clara County, you're probably in the best position here in Palo Alto because the active inventory is up 23%. And pendings are up 20%, however. So most of that additional inventory is being absorbed, and especially if you have a single family home, because remember, a lot of this is total inventory measured, not just single families. So when you eliminate the condo and townhome sector, you definitely would be, if you're selling a single family home rather in Palo Alto, my spidey senses tell me you're going to be just fine. Now, coming into the the central part of the county, the active listings here for last week, and it's very interesting, right? Because if you've been watching these videos for months, you'll know that generally when these parts are in the red, right, these are in the black. and vice versa. And so right now we're seeing some of these exterior cities and areas with lower inventory, and then some of these areas with higher inventory. And that's fine, because there's this ebb and flow in this part of the county, and so this is very normal. Now, where should you be excited if you're a home seller here in Santa Clara County in the next 15 to 30 days? Well, if you're in Cambrian, for instance, you should be pretty excited because, there's about 25%, 26% to be exact, less demand or less inventory right now. And there's 8% more demand. So this is for pendings, right? So there's 8% more pendings, 26% less demand. Now, when we come over into Coyote Valley, there's negative 18%. So there's 18% less homes for sale. And a whopping 37% more pending. So if you're in Coyote Valley or South San Jose, whatever you want to call it, this little pocket of 95111 and other areas around it is a very, very good time to be putting your home on the market in the next 15 to 30 days. Another part that, kind of like a red herring, let's say, Cupertino, 42% up pending listings and only 8% in terms of inventory. So, it's black and black, but at the same time, all that additional inventory plus a lot more is being absorbed. So it's not necessarily a bad thing that there's a little bit more competition, because the buyer appetite is certainly there to absorb that additional inventory. And that's important. That's very important. Now, maybe an area that's not so great, let's look at Campbell. Campbell up 53% in terms of active listings, up 60. Oh, I'm sorry. Wow, I forgot about that one. I'm thinking about last week's numbers, but no. If you're in Campbell, actually, my bad. Not a bad time. Up 53%, but then 66% pending. So there's definitely the appetite there. Now, is it as good as, say, an area like Cupertino, right? No, because that difference isn't there. But and it also, guys, really depends, because especially in an area like Campbell, where there's a lot of townhomes and condos, that those numbers get adjusted. If you're a condo and townhome seller, it's probably less favorable for you overall. And then in the single family sector, where it's probably a little bit more favorable than the numbers would indicate at this point. But let's look at another area where it might not be so favorable. Let's look at, let's see, where are we going here? Yes, so for example, an area like Saratoga, where we have positive 9% active listings. Right? So in Saratoga here, we're up, and then for pending listings, we're down 14%. So not the best time to be putting your home on the market. That would be an example. But really, guys, if you look at these numbers here and you look at the difference, you'll see there's almost every area here is in the black. I mean, except for some of these extraneous areas. Now, Milpitas is down, but then inventory is also down. So it's almost like a wash, right? Like some of the other areas that we've been talking about. So for the most part, selling your home in any of these areas is not a bad idea. Not a bad idea. So you should be excited if you're a home seller going into these next 15 to 30 to 45 days. Now let's look at South County. South County, obviously it's a little bit smaller, so the numbers are easier to manipulate, if you will. But things are looking really good if you're in Gilroy. Negative 12% active inventory year over year, and positive 43. That's what we really want to drive home today, is that there's a lot of appetite there right now in Gilroy. So things are on the up and up in terms of demand in Gilroy. So if you're a home seller in the next 15 to 30 days in Gilroy, might be a good time to put your home on the market. And generally, what I would say is that going into the winter months, right? Mid-November into the end of Q4 2019. I get this question a lot, and this will be coming up more and more as we head into the holiday season, is, Danny, is it a good idea for me to be selling my home during the holidays? That's a really loaded question, right? Because there's a lot of stigma around putting your home on the holidays, and it's a lot of work too to be doing that, especially during the holiday season if you celebrate and you have family things planned and all this. But there is one very specific scenario in which I would say you may want to consider doing it this year, and that's if you are a seller that is thinking about buying a bigger home. Okay. Now let me explain. Let's say that you are living in a home that is worth less than $1.2 million, and you're planning on buying a home that's greater than $1.5, $1.6 million, right? This has been the case almost every single year, and it will continue to be the case, where selling your home during the holiday season would likely provide you with the maximal a maximal delta, if you will, or minimize your delta to to minimize your output, right? Minimize your expenditure. Let me explain. During the holiday season, typically what you find is that sellers that put their home on the market are more motivated, right? There's a reason for them to sell, more so than at any given time, any other time of the year. Same with buyers that are in the market. Buyers that are in the market during the winter season tend to be a little bit more motivated than buyers that are looking at any other time of the year. There's a reason why they're shopping during the holidays, right? So when you couple that, in the winter, especially with the low interest rates right now, my suggestions to my buyers is that we get a game plan, a holiday marketing plan together to keep your home off the market while we go out and make contingent offers on properties that they like. Homes show beautifully during the holidays. You get a sense of what that home really has to offer that house really has to offer in terms of a home, right? Like how it makes you feel, how you can see your family there, etc. So there's a lot of value in going out and looking for properties during the holiday season. There's a lot of motivation out there as well for the homes that are on the market. And so as a buyer, in that strategy, we'd go in there, we'd find the property, we'd make the offer contingent on the sale of your home. And typically, sellers are more negotiable or more flexible on terms like that during the holiday season. And then that would allow us to then put the home on the market almost immediately after the holidays, and then capitalize on the new year and the new influx of buyers that 2020 has to bring. So just some food for thought if you're thinking about making that switch. I've had that work to great success over the last 5 years or so. In fact, every year, I've had at least one client that's done that with me, with my team over the last 5 years. At least one client every single winter that's done that. So it's a strategy that we employ often, and it's a strategy that can be extraordinarily beneficial to you if that's the situation that you're in. So just for some food for thought now, heading into the holiday season. But as always, guys, this is the macro, and ultimately you're the micro, and that's what I want to drive home. If you have a scenario or something that you'd like to play out, we're never too busy to take your call and run through your scenario with you and see if it makes sense for you to make a buying or selling decision now or wait, because sometimes it is better for you to wait or to not buy or sell at all. And really, that's what we're here to do is to provide that sort of insight and help you come to that conclusion. So that's my market update, guys. Silicon Valley Snapshot. This is Danny Gould with the Gould team, selling Silicon Valley, and I will catch all of you in the next video.